How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for the data that was submitted on March 26, 2019. Here's a brief snapshot of the positions held as of that date. And let's start by taking a look at gold. So as I've detailed in the latest Aruja report for members and students, this past week, the data that was released to us on the 26th of March just happens to coincide with contracts expiring with gold. So we take a look here and we see that the institutions increased their longs from 204 to 214,000, and then we take a look at shorts and all we can see is a dramatic drop. Okay, now we did experience a drop in shorts from the 126 to 115s, okay, but we associated that drop with the closure of short positions from this drop here. So that is not out of the normal. But taking a look at this here, from a drop from 115 down to 94, there's a possibility that they were closing that many shorts as price was rallying up here. It's possible, but it's more likely that the reason why that number is lower is because of contract expiration. And like I said, I've gone into detail to explain what that means in the latest Aruja report. So bottom line, what we're seeing just based on the data here is that long exposure increases up to 69% and short exposure decreases from 36 down to 31. Bottom line is net positions increase from 88,000 to 119,000. Now we take a look at oil, and so same thing was happening with oil. We had contract expirations, but what we are seeing here is more in line with what we've been expecting with oil. Right now, I've been saying for quite some time we are expecting a bigger move upwards like this in oil, and so far what we see here with this latest data is once again in line with what we are expecting. For the last 1, 2, 3, 4, 5, 6, 7 weeks they've been increasing long exposure, and during those 7 weeks you can see they've taken their short positions from aggressive to very cooled off. Okay, so that makes long exposure jump up 1 point to 83%, and taking a look at net positions, 414 to positive 448,000 positions. So expecting the continuation to take place in the coming weeks, probably even months, and then eventually it's going to collapse. That's at least from what we see with the charts. Now we take a look at the dollar. What do we see with the dollar? So longs closing off from 45 to 38 to 36, and we see shorts decrease just a bit but staying cooled off. Bottom line is longs are not as aggressive as they were just previously, but we did jump up 1 point in long exposure from 75 to 76%, and net position still in the positive. So what do we think right now? Well, we know that price is in consolidation right now, and we're waiting for it to do something. So still waiting, still bullish, nothing's changed. Looks like we're going to get a push higher sometime soon. Now we look at the Aussie. We've been very bearish on this for quite some time as it hugs the descending trend line, and what do we see? An increase in shorts from 72 to 76,000, slight increase in longs, but that's not a big deal. Bottom line is there is a small drop in short exposure, but an increase in net positions from negative 51,000 to negative 53,000. So far everything is looking just great. Now we look at the US CAD, and what we can see is there's been a closure of longs from 64 to 60 and an increase in shorts from 16 to 21, and that came as price was rallying up. So bottom line is long exposure drops from 80 to 74%, which is not what we want to see with a bigger move. But taking things into consideration, you have to understand what's going on here. We had this big bullish move over here, okay, and that was so let's see, this candle represents this, the red represents this, and the green represents this. So the green candle, we had 61,000, and then longs went higher with the drop. Then we had the move up, it was lower. Now we're seeing the drop down. It could be a higher number next week. So we have to wait and see what happens with the data next week. But the bottom line is, if you take a look at the bigger picture, demand is in control, tested supply has been hit. We're expecting things to look like that in the coming weeks. And with this bullishness here, that is supporting that theory. Okay? Now we take a look at the US Swiss franc, and this is another dollar pair. And do we see the same signs? Well, we see that longs are aggressive, shorts are cooled off. Long exposure jumps up 3 points from 82% to 85%, which is a very big positive. And net positions are still in the positive. So everything is looking just right for a move up. Okay, now we look at the euro. And again, I went through this one in quite some detail. If you haven't seen, there is let me just find it for you. I did a journal entry. If you come over to whiteoakfx.com/journal, right here, March 31st, I did a really in-depth analysis of the euro and explained to you what evidence we have to support a bigger move to the downside. Very compelling evidence. It's a deep analysis of what the institutions are doing with their positions and how they move the market. So I would encourage you to have a look at that. So with that said, we'll just touch upon this very lightly. Last week's data, March 19th, was contract expiration. So we saw a big decline in longs from 151 to 141. And again, we see a decline from 141 to 139. Meanwhile, on the shorts, we see that they dropped some of their shorts from 227 to 219. This past week, they just increased it very slightly. Bottom line is, take a look at these numbers here. Increasing, okay? Net positions are increasing, and now a negative 80,000, okay? Everything is telling us that price is going to move lower, including the evidence with supply and demand, and the evidence with the positions held by the institutions. Okay? Now we move on to the pound. This one's a little bit more trickier, okay? Now, contracts expired around this date here, and we saw a big decline in short positions from 66 to 43. Now, we weren't quite sure if that was just them in the middle of submitting their positions while being in the process of accumulating their shorts, or if they use contract expirations to shift their positions. And now we have the proof by looking at the positions here. We can see that shorts are now 42 and longs are 33. Bottom line is, we went from a 69% short exposure down to 56 in a matter of a couple weeks. And you take a look at here, this is a big decline, negative 36,000 to negative 8,000. We see a structure building to the upside. Okay, so does this mean that this big drop in short exposure, does this lead towards a larger move to the upside that is in the workings? Well, it's very difficult to say. We know that the dollar strength is what we are expecting, so to assume that there's just going to be a move like this wouldn't be the smartest move. So I'm watching this one and I'm learning from this experience as it unfolds. Now we go to the US dollar Japanese yen. What do we see? An increase in longs 79 to 80, a decrease in shorts 20 to 18, which causes long exposure to increase 1 point, and that's what we're waiting for, right? Bullish down here in December, October, November. Bullish, less bullish as price climbed, but becoming more bullish in the last few weeks. So expecting these numbers to get back up to these numbers as we see a continuation of a move to the upside. That's what we are expecting. That's what all the evidence is pointing to. Now we have the Kiwi dollar, and we see a big increase in longs from 17 to 22. Basically, they're bringing positions back up to what they were previous to the contract expiration. So they were just increasing longs, which caused price to get up here to the highs, and then they increased shorts, which caused this move to the downside. We're expecting more of a move to the downside at some point once they're finished their consolidation. It looks like, again, It's very similar to the chart that we just looked at. Back in October, November, December, right here, they were very bearish, okay, from the move, and then took profits, causing price to go up, and now it looks like they're reaccumulating to push back up into these numbers. So expecting a move down like that in the weeks to come. All right, ladies and gentlemen, that's your CFTC report for March 26, 2019. Thanks. Talk to you later.